So the recording is live. So now let's go. Now on your chart, go to the exercise which you took. Go to the reply. Okay, so I'm going to ask a few questions, and then we are going to review it together. Okay. So 10 hours a day, especially starting of London and New York session. Could you elaborate a little bit on why you conclude on 10 hours and why you think you need to be on chart for 10 hours?
I I think not being on the chat for the 10 hours, I think I was replying that's the other session that I would like to trade, not the all the time I've been on the screen. Or the session that I would like to trade. Do you hear me?
Okay, but yes, I do. But don't you think as part of your trading plan, when you say you consider plus 10 hours when you know you have 12 hours in a day, don't you think you might have other factors, other realities and circumstances about life that could affect probably your day and then get to interfere with your trading plan since you've already booked for 10 hours? You're trying to register a pattern on your brain, and when you register so much hours and you're not able to provide that particular kind of hour, there are this part of you that gave this response to something being wrong, you see. So to me, from my own end, I consider trading 4 hours a day because the intersection from one section to another, which is considering London, New York, and Asian section, takes about 3 hours in particular, which is the key zone. I don't know if you have heard of ICT key zones before.
Oh, let me elaborate something. Maybe
Okay,
I've understood.
but you know about London section, New York section, and Eastern section, right?
Yeah, you do know, of course, the three session, Asian session, London session, as well as the
Yes, don't worry. You don't have to
US
have
session.
much
Okay.
information about that. It is the duty of the mentorship to explain to you. So I'm just making sure you have the
Yeah,
basic idea of what they are. So if you know a little bit, just let me know, and then I will elaborate,
yeah,
knowing that you have a little information about them. Okay?
yeah. Okay.
Yes. So now, what you need to understand about London section is that London is the most manipulative section of the day because London section
Yeah,
basically starts the day with the highest volatility since we're coming from a low ranging section like Asian section. Okay.
yeah, of course.
So
Yeah,
London section is one of the sections that entries are not really direct and volatility is very high. So a lot of activities are going on. And it's not really that
yeah,
easy to tell the direction because it's starting a new day. While New York section, on the other hand, is one of the easiest sections to trade because you already have the bias for the day set from London section. And the section handing over to the next section is a volatile section. So either New York section is going to reverse the trend of London or is going to continue the trend of London section. So it's easier for you to tell what you're going to do because it's going to either be a reversal or a continuation. You see? So when
yeah,
I say I trade the intersection of two sections is because I trade from the intersection of London to New York section because that is when the handover happens. And during the period of this handover now, the trend is either going to be reversing or continuing the previous trend, which is what I explained to you just now. Okay? So it's the
okay.
best time for you to get the kind of entries you see me get on my channel. You notice the way my entries are always that direct and it's like I'm always on point. It is because
Okay.
I am that calculated and I come in at the intersection of the London section to New York section. Now, during my own time, London section is the morning because I'm in Nigeria. So London section is in the morning and New York section is in the afternoon. You see? So it's easier for me to say
Yeah.
I trade around 12, 1, 2, which is one of the
Mhm.
periods of the time I'm most active in the channel because that is when I get
No,
my entry. And then I hold it, I observe it, I make changes till around 3, 4, 5. I'm done for the day. Just like how we are doing right now. If you notice in the channel, I just updated the guys that I'm done for the day. And, I showed them the screenshot from the trade, which I took around morning, would be 12, 1, 2. You can cross-check these stuffs with the Telegram channel, and then you will notice the similarities in what I'm trying to explain to you. And this is mainly how I use the London, New York, and Asian section. You see, I don't use it because I want to draw most of these things you see people drawing online. Those things are not important. What is important is the effect this section is going to the table. Do you understand?
Understand.
Exactly. So when you say you want to trade London and New York section, you have to understand also that you notice that we are now looking into your answer of number 3 and also relating it to your answer of number 1. Okay, so we are kind of like answering 2 questions, 2 replies at the same time on your trading plan. Okay, so you can now use from this experience and this section you have with me, review it, and then make some changes that will be logical to the answers you gave in the first place. That was why I refused to write anything down, so we can review it together, and I will give you my reasons to why I say so, and also you will see my reasons to why you need to adjust them. Okay.
So
Okay.
London is starting of the London session is very manipulative, high volatility, which causes the violation of strategy, or why you choose to
no.
trade
Listen. Now when we
yeah.
trade a market, right? We trade 2 currencies.
Yeah.
And most of the currencies we trade are USD and Europe related, right?
Yeah.
Okay. So you have to understand that trading are more viral. Central banks that are involved in this are banks within Europe and banks within US, which now is why we have what we call London section and New York section. Do you understand me?
Yeah.
So when they say it's London section, it means it is the daytime in London arena in Europe. Most banks are active. Most banks are active. Most traders are trading. So liquidity is flowing. Are you understanding me? Now,
Understanding.
London section is the first section of the day. When you come to the market, when you go to your average market to sell, the price don't just set in the beginning of the day, right? So they have to see what negotiations goes on so that at the middle of the trade, they have a fixed price, right?
Yeah.
So the beginning of the market, you can get things cheaper. You can get things more expensive because there are still more liquidity and there are still active traders with no particular direction yet, right? Now, that is why we say London section is the most volatile. I'm not saying because it validates my strategy. Regardless of the strategy you use, we are trading the same market structure, which is what we will study in our second class. We are all trading market structure. It is not your strategy that is the key. The key is the approach you use to approach the market. It is not the strategy. Anybody who have given you that information about strategy, this strategy, that is all nonsense. Do you understand? It is your means and your understanding of what you think you are doing that makes it to work. Do you understand? So London section is not the most manipulative because of my strategy, okay? It is the most manipulative because there is no actual trend coming from the previous section. What section comes before London section? Asian section. And Asian section, you know which section is the most lowest section among all? Asian section.
Yeah.
So Asian section doesn't have a trend, right?
Of course,
It's
they are moving
mostly
in
a
ranges.
consolidation. Exactly. So there is no actual direction for traders to trade in. So it is volatile, but it's very manipulative to track logically, not because of the strategy. So regardless of your strategy, you might easily get a wrong entry on London section. And New York section, the market is more settled because the traders coming in from US, which is the day, because London and US are opposite of each other. So London is earlier, just like we experience day while they experience night. So when they experience day, London is already at the evening. You see? So London section is no more active, but New York is now active. New York sections have something to go with because London has already happened and a lot of manipulation has happened. So the trend is clean. It's easy to follow price action during New York section. You see? So me personally, my strategy is trading in between, getting my entry, not just I trade New York, But I get my entry at the ending of London because I use the price action of London to understand what to do in New York.
Okay.
Do you understand me now?
Understand you now. Because so during the London session, they manipulated the market, each and everything they are playing there. But at the intersection of London going to the New York, so that a clear picture have been at least
Exactly. You have
observed.
something you can trust, not just based on assumption, but based on what have already happened. Because Asian
Yeah,
section doesn't do anything. Now, I would explain Asian section to you. I'm just giving you insights to how you can understand London and New York, okay? But
yeah.
do you understand the main point here now?
I already understand it.
Exactly. And the recording will be available, okay? So you can also watch the recording like how we made available the first one, okay? So, and with your permission, this one might go viral because, it can help a lot of people as well to understand the information. Just, I select few classes, not the full
Yeah,
idea. And the people watching do not get to ask questions, you see? So the mentorship is still on you and you make the
yeah,
improvement because it is your idea they see and your questions they get replies to. But we can also make use of the knowledge by
yeah,
sharing it to others to learn from it. Okay, because I'm 100% sure you did not understand that this London, New York are this important. You see, you thought it was
yeah,
based on strategy and how you have seen it online with all the lines people draw and all the assumptions they make. But without those aspects, it makes a lot of sense why we call it London and New York and Asian. It's not just fancy words, you see.
yeah,
So, Asian section. Asian section is mostly the liquidity section. It's called the liquidity section because market doesn't really move in any direction. So these
yeah,
people in Asia, they don't really understand the forex market, just like how we don't really understand it in Africa. And Africa
yeah,
time is considered London time because we are very similar with them. So most of the time, our morning is the same time with morning in London section. So most traders are trading London section from Africa. Okay.
yeah, yeah,
But
yeah, of
Asian
course.
section is slower. And while Asian section is lower, it is used to generate liquidity for London section, which is the high of Asian section cannot be trusted. The low, the official low Asian section make can also not be trusted. And I also, during this recording, when I will be posting it on YouTube, I will make some pictures and get it to the video editor to make something that like a presentation to make it more understandable, like the last video I posted on YouTube. If you watch that, it
Yeah,
was a recording from a different mentorship, but I added some
yeah.
few features that made it more understandable. So I will do the same with this one, and I'll add some pictures that you can also watch, and then it will make the class even more understandable to you in particular. Okay.
Okay, okay.
So Asian section, the high and the low cannot be trusted because it does
Yeah,
not have a particular direction and it is very, very slow. And when you now know this, you now notice which area of price action was Asian section created. Because at the end of the day, you notice that where do they create liquidity with smart money concept? Below or above an area of interest.
yeah,
Exactly. And then the manipulation comes in and do what? Clear out the high or clear out the low to create a
yeah,
manipulation before a change of character. I don't know if you're
yeah.
picturing this pattern I'm talking about in your head.
Yeah, at least I'm picturing something. Yes.
Exactly. So it's now making sense now, right? How that pattern came into the picture.
Yeah.
So
Yeah,
London section
because
is
what
called
you are,
manipulative because London
yeah,
section now clears the high of
yeah,
Asian section and clear the low,
yeah,
you see, and then
yeah,
by the time it's done, New York section comes in and then the trend officially continues. That's where we now get that perfect entry on smart money concept that is always direct.
yeah.
But now it doesn't mean because London comes in and clear the high and low, you can always tell which is going to be cleared first. Sometimes the low might hold, the high might get cleared out. Sometimes the high might hold, the low might get cleared out. So it's very, very manipulative. And this is why London section is called the manipulative section.
Okay. So do you mean that during the London sessions, when the price is moving in a certain direction, maybe after breaking a structure and changing of the character, then
Yeah,
after during the intersection of the sessions, the price will come back in during. mitigation, and that you get a
Exactly.
trade with the low risk, then we continue.
Exactly. Because now the manipulation that happened from London section would happen when? During the intersection of Asian section and London section.
Yeah,
You see,
yeah,
that is in
yeah.
my own time in Nigeria is around 8, 9. That
Morning.
period is very manipulative in the morning, yes, because you might think the market is moving in one direction and end up stopping
Yeah,
you out and then move in that same direction. You see, and
yeah.
then that becomes annoying to you, and then you leave. Then when you come back, you find out that you got a clean entry again, but because you got angry and left, you didn't get that entry,
Okay.
and everybody's now getting that entry. And that entry happened during New York section after that first manipulation have cleared out your money. So now you don't
Okay.
have capital to go in the second time. So London is very manipulative in so many ways, logically, technically, fundamentally, but it is a volatile market just like New York section. Okay?
Okay. Yeah, yeah,
But this does not mean manipulations does not happen in New York section. Okay, because New York
yeah.
section is when we have NFP. If you notice, NFP news is always in the afternoon
Yeah,
because
and
it's a New
California.
York, it's a US news. Okay, so most of these
Yeah,
events that happen in the afternoon are mostly events coming from US, which is why we have DXY for correlation analysis when it comes to forex trading.
yeah,
Okay,
yeah, yeah. Yeah,
yeah, exactly. So now, when you say you trade 10 hours a day, trade 10 hours a day is already putting you in between three sections because you are trading the entire day. You would start in intersection of London and you will
yeah,
get an entry, you will get stopped out, you will get an entry, you will get stopped out, and you're still trading the intersection of Asian section from New York section because it's a circle that repeats itself. And if 10 hours
mm,
you are trading, you are currently in the market from the three circles and you definitely will get confused.
yeah.
You see?
I
So
have,
you
I
have to be,
have good, yeah, I have got something from there. That's why I think, yeah, during the previous session, previous trading, I was told you sometime I get lost the main of my account. That's the one of the reason of that. I traded during the London session. I was entered during manipulation. So the account get busted due to the reasons.
you see, that was why I said some of your problem might not be the technical aspect. That's why I can't rush things and take you to the chart and show you this and show you that. Some of the problem can be coming from little things like this that you're not aware of, which I have to let you know before we go into any complicated lines that might get you confused. So we have to get these things
Yeah,
straight because the main aim is for you to be able to be successful. And if you don't correct these little mistakes from the middle, there's no way you can go front.
yeah, yeah, yeah.
So you correct that first part. For me, my official time of trading is 4 hours a day. 4 hours is
So
starting around 12, which
you
is
you
let's say 10
so you
to 12.
after 4 hours
That
from
is now
opening of the London, those
11.
started trading.
I trade around 4. When I say around 4 hours, I mean if I'm starting the trade around 11, I should be within that trade. If it's a scalping, remember this is in a day. I should be within
Yeah,
that trade
scalp.
observing if market has mitigated or has not mitigated for the next 4 hours. If it doesn't mitigate, I might delete my entry and come in the next day to observe that same chart. You
Yeah.
see, because if your zone is going to get mitigated, it's going to happen fast. If it doesn't happen fast and it starts to then go around your zone, it's likely because you're the liquidity and they are building liquidity. So it doesn't take
Mm,
time. If you check my trade, price just come in and then it moves. And that's when you know you're correct. When it comes in and then it keeps you pending, increase your anxiety, then that's emotional manipulation. That is liquidity. That is their aim
mm,
is to make you disbalance. And whenever they're doing that, they are going to do a stop hunt. You see? So when I
mm,
get in a
mm.
trade and I see I don't move in the next 4 hours candle, remember 4 hours is one single candle too, right?
Yeah, of course.
On the
Oh,
4 hour time
noted,
frame.
noted. Okay, okay.
Exactly. So if my on the 1 hour's time frame, I'm talking about four candles. If I get an entry, the next four candles should be entering my zone. That doesn't mean
Mm,
if a market comes into my zone and move, and then maybe I
mm,
get my entry mitigated, I would not say
mm.
4 hours has reached, I should close it. No. It just means I am triggered. I can be in a trade for 2-3 days, but I don't wait for an entry for more than 4 hours. That's what I mean.
Okay.
And I don't keep a pending entry from a very far zone when price has not got into that zone. That is very wrong because you don't know what will happen. You have to wait for price to get close. You watch the change of character and then you get an entry. So if the change of character doesn't give me my entry before the next 4 hours, I know that I'm likely liquidity. So I might even close and then watch till price gets into that zone. Then I see what happens. So when I say how long do you trade a day, I will tell you I spend 4 hours trying to get an entry, but I can spend the whole day holding my trade and I can close my trade within 1 hour.
Okay.
Do you
So
understand?
I understand your point. So I heard that you can spend 4 hours finding trade, but you can hold the trade even a single day or even 1 hour. You can close it regarding to his movement.
Regarding on what I'm looking for, you see, on how much I'm
Yeah.
trying to get or how long I'm trying to trade. If it's a swing, I can hold it for 3 days. And maybe before that 3 days, I might get some patterns up, like take some percentage off and then break even how I
Mm.
normally do on the channel. You see,
Mm.
I take it from
Yeah.
loss and I put it on break even. Then I take some profit
Yeah.
up. I hold the remaining ones, maybe for 2-3 days. Or
Yeah.
it's a scalping trade and I get my entry and in the next 2 hours, enough money and then I'm out.
Okay. So you use a very small time on trading because you wait is the
Exactly.
perfect time
You're
to
not
enter,
supposed to
then
even stay long.
you get out in the perfect time.
Exactly. You just have to come in at a time when you know something is going to happen. Is it that you lose fast or you win fast? But you can't stay for too long because once you stay for too long, you get confused. There are too many lines, you see.
Yeah.
You start becoming
Yeah.
delusional.
I think what
So
did you say? What did you are telling me? Of course, the same thing that says what you know, you know. Because you want to understand
you
that
see,
I'm going to enter this place, in this point, and you know after what time I will be out. I think you are very sure with what
well, that's why some people don't understand the value of mentorship because there are some certain things you cannot find out yourself without somebody from inside telling you. That's why I
you
take this medium to share out some of this mentorship program because not like some people don't want to take the programs. They might not have the money.
yeah,
And the money they're paying is
yeah,
not for the knowledge because the knowledge is more than what you pay for. But the money is to keep you
yeah,
engaged, to know that you paid for this information and you have to take it serious. You see, and
yeah,
you, it's
yeah.
also
We
paying
all
for my time
serious.
because I'm spending a lot of
Yeah,
time explaining this to you.
yeah, of course, of course. That you open my
You
mind
see?
for something to take it to know that trading is not about your hope. It's not about yes, yeah, once you know, you know. Because once you know that's this
You
point is
see?
I'm okay to enter. Once you validated, you have to know. Once it's not moving to a direction, you have to know and get out. Yeah, yeah, of course I understand something from you.
Exactly. All right. So let's move to the second one. You say 4 pairs I would like to trade during the day. Okay. Now, when you say 4 pairs and you want to start with $200 from number 7,
Mm.
okay, and you risk 23 pips on a single trade, and if you times that 23 pips, let's say, let me see if there was a question about a lot size. Okay, but let's say on a $200 account, okay, because you
Yeah,
say
yeah,
starting with 200, okay.
yeah.
A $200 account, you can easily, if you do know what you're doing, if you do
Mm.
know what you're doing, you can easily get a profit account of 10K, like how I started, because I found out that you can't really trade your $200 and get something reasonable with calculation because you just keep
Yeah,
making $30, $10, $20, and then you not get content. Before you know, you blow the account because you
yeah,
try to flip it to something big. But if you do something smart and if you do know your calculations, like what I did, is to
yeah.
get a 10K account of around $99
Mm.
maximum, I think, for the most expensive profile. And then
Yeah,
you then use these rules to try and pass the challenges, which you will if you stick to the rules, because you're not going to be risking just 500 a day. That is, you number 7 will not be you're starting with $500 a day if you're using a 10K account, because you cannot lose below that. You cannot lose above that, sorry. So don't look at the 10K, look at it as 500. And now on that 500, you now calculate how much you want to risk and how much you want to handle. And you will see in a month or two, you are past the challenge and you're good to go. And you're now making cool cash of 300 to 400 on your 10K account every month. That's how most of my students become successful. None of them really trade their own accounts. They all use Profilms, but they do it calculative. They don't just try luckily. You see, everything is calculated. So let's say 4 pairs. I don't think 4 pairs is possible, because 1 pair can give you a lot in a short period of time to focus on. You see, you can have 4 pairs in general, but trading 4 pairs a day is too many fields. It's like fighting a battle in too many fields. There's chances that you might even lose all and not win anyone than fighting a battle one at a time and knowing you have 4 options. You having 4 options is like saying you trade only 4 pairs in total. Like me, I trade only 6 pairs, but I only trade one at a time. But I don't force it. If I go to this one and I see it's dirty, I go to the next one. I see it's dirty, I have 6 options to choose from. If I don't see anything clean in these 6 options, I'm out. I'm not trading for that day. But if I see anything clean on one, I will focus on that one for that day, because on that one trade alone is enough to make me 1% or even 0.5%. Are you understanding me?
So, understand.
So you understand my point why I say one at a time, but 4 pairs in general, right?
Yeah, understand.
Okay. So I will send you also my reply of the changes I made as we screen them one after the other. And then once you get those replies, you use them to focus on, because these are just questions. Number 1 is 10 hours a day. We now say try to practice on 4 hours a day. You have to still use demo and try to see how you can get entries within 4 hours and, focus on how to practice what I'm teaching you, because you have to practice it too. So you get a demo account and you practice. You have to try and see how you can trade within 4 hours and not 10 hours. And then you can also, on number 2, you have to find 4 pairs. You can say, yes, I have my reasons through my practice, not because you like them. From this practice, you can see that these 4 pairs are the 4 pairs you want to trade.
Yeah.
Because you understand them better, not because you like them. Do you understand me?
Understand.
So moving on to number 3, you say London section and New York section. We're going to keep that at focus on New York section. Okay?
Yes.
So you can't trade the both of them, unless you'll be trading every time a day. So you have to trade just one. So focus on New York section. Try to see how you can get entries on New York section more and see how often you are correct. Okay?
Okay.
So number 4, you say I had blown more than 10 accounts. That's a lot of accounts, but I've blown I think around 8 to 9. So I think most of the game
We
you
were in
get.
experience to 80 to 90.
Yeah, till I stop counting,
I think
But at the
no
end of
any
the day,
trader.
I also can't count how many times I've withdrawn. So it's fair now. But I lost till I stopped counting before I started making enough till I stopped counting. But at the time, you stop counting.
Yeah, the time.
So, but on the board of the question I asked mainly was how many losses a day before you quit trading. So that's like how many losses before I quit trading for that day. So that also goes to how many entry do you want to take in a day. So since we're focusing on one pair at a time, which means one pair doesn't mean you will take only one entry. Do you know?
Yeah.
If you notice, I want you to also take out your free time, go to the channel, the main channel, the one of 5K. Notice my trade on GBP AUD on the analysis I made for swing and scalping. You will
Okay.
notice that I have two entries on the same pair. And if
Okay.
you sum all my lot size together, it sums up to one lot size.
Okay.
And I made a calculation on the channel over the weekend that I said one lot size is the average lot size to use on a 100K account.
Okay.
That's because right now I'm trading a 100K account. So I'm doing those calculations and I'm posting them publicly. But
Yeah.
the public doesn't know why I'm doing that. But it's for myself because JayFx is a personal journal to me, but people can also learn from my own experience. So most of my things I do it publicly, but the public doesn't know how much I gain from these things because I don't post that to them. That's none of their business. But they can learn from
Yeah.
it if they are willing to.
Yeah. Of course.
So how many losses I take a day before I quit is basically based on the calculation of how much am I risking in a day. For example, like I said on that 10K
Mm.
account, I'm going to break it down for you on the 10K account since you're trying to start with $200, which is can get you a 10K account. Okay.
Mm.
When I was trading a 10K account, I
Yeah.
can only lose. If I lose 500 a day, I've lost the account. So how much I lose
Okay.
a day before I stop was 300,
300
and that 300 was 3%. You
of
see,
account.
of the entire 5%,
Yeah.
which would be that 500.
Okay.
You see, so that way I don't get to blow the account. There's still 200 left that I was not supposed to blow before the account is seized for me. So when I lose two trades, a single trade, I can risk
Mm.
150, depending on how
150.
stressful the trade is. And this 150 we're talking about here, one single
Yeah.
pair, I can break one
Yeah.
trade into two places. That is saying, if I'm to use back then when I was using when I was using a 10K account mainly, I trade with maximum of 0.5 lot size. And that
Maximum.
0.5 lot size now would be maximum on 10 pips. That is the smallest risk. So if I get a good
Okay.
entry and the pips is just 10 pips risk, I can use a 0.5 because a 0.5 is $5 per pips. So 5
Yeah.
times 10 would give me, minus 50.
Yeah.
But
50.
if I use it on a 10, you see, on a 30 pips, 5 times 30, it becomes bigger.
Yeah. 150.
So when I have a trade like 30 pips, I then reduce it from 0.5 to something like 0.2 or 0.3
Yeah.
because 0.3 is equals to, on the video, all these calculations will be made for you to understand too. So don't worry. Just make sure you watch the recording when it's made public. I'll make sure that get out tomorrow or next, okay? So number 5, we're talking about how many percent would you risk in the trade. So number 4, when I come to a conclusion, I would say, let's say 2 major losses a day. Okay, 2 major losses a day would be, let's say, dividing 300 into 2 if it's a 10K account. So that would be 150, 150. So if you lose 150 on your first trade, and then on the second, maybe on the second, third, regardless of how many entries you get or how much you break them, but 2 major trade is saying 2 setup you had, you lost the both of them. Not the means of how you got your entry, but the setup itself, which is the technical method you use. So you lost 2 major setup, and that is enough for you to close for the day. You don't have to make all that day. You can come back the next day. You have to just make sure you do not blow your account, because the only way you blow your account is when you don't have when you stop. Because if you can't stop, then you are like a car without a brake, and you won't stop till you hit something. So, and that hit is bottom, which is you lost your account. So we say 2 major losses a day, not to compromise the account, so you can have something to come back to. Moving on to number 5, 1% risk on a high probability trade is enough. You cannot risk 10% because if you risk 10% on one trade, how many times do you think you will lose before you lose the account? Because if you lose 2 times a day, you lost 20%. You come back the next day, you lose another 2 times, you lost 40%. You have only 60% left. If this is a profit account, risking 10% on one trade, if you lose that trade, you have lost the profit. Or you lose that 2 days, you have lost the profit. And then on a normal account, if you lose 10 times, which is difficult, I know, but then because you're emotional and you're risking 10% on one, the losses are very big. So losing 10 times will be very easy than you even think. And then that your account is gone. So you can't succeed risking 10%. You have to be small so you can take small losses. Then you can do it over and over and over and over again. You can take bigger wins and then you accumulate it to something. So to risk 1% on a high probability trade and 0.5% on low probability is what I have been using and is what I am still using, which is why I'm successful. I cannot risk more than 1% because 1%, if I lose 1%, I have 9% to go on a profit. If I lose another 1%, I also have more 9%, 8% to go, sorry. But if I use my own account, yes, if I fund my account, if I lose 1%, I have 99% to go, right? So you see, but when you win 8 times, which you're not just risking 1% to make 1%, unless that's not winning. You risk 1% to make 5%. That's trading. You cannot risk 10% to make 4%. That's not trading. You see? So if I risk 1% to make 5% and I win, I just made 5%. If I risk 1% again to make 6% and I make 3%, in total, I have made 8%. If I lose 1%, I only lose out of my profit. I cannot lose down to my account. But if you use 10% to make 3%, and then the next day you lose 5%, you lose one trade, which is the 10% you're risking. You already lost more than what you made yesterday, so you can't even win. You see? So there's a problem with risking 10%. And try and calculate what you mean when you say you risk 10%, because that is very, very high. That is very high. Because making 10% is already very difficult for you to be risking 10%. And I would just write 1% on a high probability trade and 0.5% on low probability trade. Because you can lose 0.5%, yes, but you cannot afford to lose 10% and 3% on something you're not sure. The risking 3% on something you're not sure is just very wrong, okay? So on number 7, once you can speak, let me know, okay? On number 7, where you say you start with $200, I would say start with a 10K profit of $99 or below. So that way, your experience can teach you more, and then you can be very calculative to learn from your experience. Because profit make you calculative. Profit make you calculative. You see, so when you are that calculative, even if you lose the account, you learn very well because you went with a calculative mindset, and then you can easily do it again. But when you use $200 and you lose it, then there's a problem.
Yeah.
You don't trust yourself anymore. Okay.
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 So on your
You're back online.
on your advice is also saying if I have to buy a property for 1 year, it will be
If
more
you
good.
know how to trade, you'll be able to trade the profit account. And by the grace of God, by the end of this, you should know how to trade. Because $200 will not get you anywhere.
Of course.
You can flip it, but that will be too much stress. You can easily blow it for you to even flip it.
Yeah.
But if you are rule based, like what we are trying to turn you into right now, sticking to a few rules like losing 500 a day would not be difficult for you because you are already used to rules.
Okay. So to pass a property account, what are the conditions to pass a property?
I think we will discuss that when we get there. Okay, let's focus on what we have
Okay.
now and then let you grow.
Okay.
Remember, you're trading a demo account for now. You don't.
Okay.
If you let me know when you're going to be planning to get a profit account, and then we will discuss about that. And I would also tell you if you're ready or not. I can't give any information about that for now because that would be very useless to you and will also compromise your learning.
Okay, no, you know what? I have to listen and follow every step that you have been guided. Because if, once I have to
Exactly.
understand and follow
I
my
would very,
way,
very much appreciate that.
no changes because I have to follow what you.
Regardless of, I, yes, and I like the fact you are open with me because what makes things difficult is when you go and try to do what you think you know from what you have learned, and then it goes wrong, and then you come back to tell me you did this, you did that, without even consulting me. Then you don't regard me as a mentor, one, and then you also compromise our learning because you start to add emotions. You see? So at the end of the day, in 3 months' time, I would see the effect of changes from what you have learned. And then I will tell you if you're good enough to try out on a live account. Or I will tell you if you're not and you need extra learning. You see, so let's follow it that way. And then when you're free, you'll be very proud to come back and say, I appreciate the entire exercise.
Of course.
So let's move to number 8. You say 23 pips risk per trade. That is fair. I like the fact that is fair. That is one thing that is fair. But what we're going to do is we're going to say 20 to 40 pips max, because we can't give a specific number because we cannot tell the risk on each structure. You see, sometimes it's big, sometimes it's small. But we are going to say 20 to 40 pips max because if it's a high probability trade, sometimes the stop loss can be big, but it's a high probability trade. It could be within 30 to 40 pips. Then you now reduce your lot size and you still take it. I'm telling you out of experience. Sometimes, like the one I took today on a swing trade, I had to place my stop loss around 40 pips.
Stop loss.
But it was a high probability trade, you see? But when you have rules like 23 pips max, you now skip trade like that. You get emotional when it goes in your direction. You say, this rule doesn't work. It's hindering me from making money, you see? And then you now start to invalidate your own rules, which now brings you on a downtrend.
Yeah, I think it's not the 20 pips, risk per trade will be good, more value on USD pair because they are good. They are not exotic pair. Exotic pair it needed to have more pips like gold. I think once I say exotic pair, no, exotic pair 3 pips.
Yes. So we're going to say 20 to 40 pips. So it puts you on a considerable position. And then it keeps you open to other numbers of pips within this range. Okay. And then number 9, when you say I consider trade when they invalidate, when they hit my stop loss. Okay. I would say not just when they hit your stop loss, but instead when they hit the invalidation box on your setup. Remember, your stop loss is on your entry, but on your setup can be your zone, and that zone gets invalidated. But at the same time, sometimes you can try to get an entry, and then your stop loss is hit because of the lower time frame structure, but it does not invalidate your zone. And then the analysis goes in your direction, but you got stopped out in your MT4. Has that ever happened to you before? So to avoid situations like that, we say the trade is invalidated when it hits my setup, not my stop loss, because my stop loss can be based on my emotions. Maybe I'm trying to place it at a point where I can risk more money. You see? And then at that point, you get stopped out on your entry, but the setup is still valid. And then the setup goes in your direction. So when you say on your stop loss, that is still very manipulative and is not very clear. So we're going to say when they validate my setup, not my entry. So the entry is gone, but you can still get another entry because the direction is still clear. So you lost the trade, but the setup is not invalid yet. So we'll say setup, not entry. So number 10, you don't know much about fundamentals. And then fundamentals is what we are doing right now. Fundamentals is what we are doing right now. And
Okay.
fundamentals simply means the foundation of that particular concept, idea, reason, just the fundamental concept. You see? So when you say
Yeah.
fundamentals now,
Do
we are talking about the original meaning of things.
yeah, yeah,
You are going to learn more about fundamentals. So when
yeah.
you keep learning, you are going to keep knowing more of what to do with those kind of news. For example, when you have a news like CPI coming up, you know that this is happening
Okay.
in London section. It could be in the favor
Okay.
of um definitely is mostly in the favor of US, which is the US dollar. And then
Okay.
Euro USD can be in a position where you are expecting US to be bullish. And
Yeah.
then CPI is coming up. That is an extra confluence to why you should buy that trade. You should sell, sorry, because USD is the selling power. So that is
Okay.
another confirmation to why you should sell, because it is in line
Mm.
with maybe your entry, or it is in
Mm.
line in the direction you're already in.
Mm.
So you can say, okay, a news is coming up. I should break even, hold my trade, and wait to see the direction.
Mm.
You see, so we don't enter trade mainly because of news, but instead news help us to know when to leave, when to stay, and when to trust what we are doing. That is what we use news for mainly.
Okay.
Do you understand? So do
And
you trade during news hours was the main question. Fundamentals is a different thing entirely. But when you say do you trade during news hours, you can say only when I have an entry already, because that's my own answer.
okay.
That way I can use the news to know if I should hold or if I should close based on the direction of what the news is saying.
Mm.
You understand?
But
Makes more
on
sense,
on
right?
on on my point, I have to understand that I don't know how to interpret news on using it on tradings.
Yes.
That's how, yeah, yeah.
Say
I maybe I
yes.
have to get education
Not
about that one.
you
Then
don't
I
know
will
how to
know how
interpret
to
news. Say you don't know how to
put them together.
interpret news yet.
Yeah.
That was why I said in the process of this mentorship, you will understand more.
Okay. Okay.
So you cannot just downgrade yourself as a trader. You don't know how to interpret news. That is like saying as a policeman, you don't know the rules and constitution of a country. That's very bad. Okay, so that cannot be your reason for why you say you don't want trade fundamentals, because you don't know. What's stopping you from knowing?
Yeah. I think lack of
You see,
mentorship
so
is
you
the
don't
problem.
know how to interpret news yet.
Yeah. Yeah, I think you are very clear. You are very open. You cannot be a police without understanding how to interpret the constitution of a country. Even here, you have it is my fault that I cannot understand how to trade the news. Why I'm a trader is a big fault for me.
And you're expecting yourself to be successful. Is that not trying to define the laws of nature?
Yeah, we cannot violate code. That's why.
That's why I said, even me myself, I don't take entries based on news. So I don't trade news. But
Yeah.
I use the information of the news to know if I should hold, or if I should close, or if I should have confidence that this entry is correct. But I don't
Mm,
use the news to say I'm going to enter because of this news or because of
mm,
this political situation. I can
mm,
say US is having a crisis. Okay, that's enough to
mm,
think US is going to be weak.
mm,
So I go to my technical analysis and I look at my strategy. Is USA showing that they are going to be bearish? If yes, then I would sell. If no, then I would not. But I won't enter a selling trade because maybe something is happening in the US and then I'm using that as my reason to trade. That is when you say you trade mainly news.
mm.
So you can say I don't trade news, but I use it for correlation, which is I use it to compare, which is what I do. So
Okay.
I only trade news when I have an entry. That is, I go and look at the news information so I don't get surprised when something comes out and hits my stop loss immediately. You see? So I look at the news and I say, and I can say, I would also download this platform called Forex Factory. I would explain also in a different topic. I think inside one of the topic, there was a different one. We will focus more on that. And I would explain to you more how you can use Forex Factory to understand the influence of news and the impact on your trade. Okay, because that is what I use. Okay.
Okay.
So during this process, you would learn more. Now, number 11, we say break even of a trade. I do break even when my trade mostly when it moved 2 times pips risk. Example, my SL is 23. I do place break even when it reach 40 plus pips, but even when you see, okay. Well, that is a fair statement. That is a fair statement, but you can't always be sure because sometimes 40 pips is my take profit. So that's already par gone. But what I do is that I do break even when price hits a new structure. That is when we enter our next topic, market structure. You will learn what we call swing highs and swing lows, and structure highs and structure lows. I'm going to teach you like a beginner, you see, so you understand more from how I see it and how I use them. So if I'm on a bullish trade, and then price goes from 1 point to create a new higher high, that is enough for me to break even on that time frame. Let's say on the 15-minute time frame, it does that. You know, it won't look the same on the 1 hour time frame, right? But at the same time, once there is a higher high, there's nothing stopping a lower low to fall when price starts to come back down, and that can hit my stop loss. So that is when I break even.
Okay.
Because at that point, anything can happen. Not just because of the pips or because of how much I've made, but because of what the structure is doing. So from market structure, I can tell when to expect a lower low, when to expect a higher high. And then when I see those things, I break even, not just because of how much I've made, but logically because market structure is moving. Do you
Okay.
understand?
What you say now, you are to today post about the GPPLD. There is that was here. Once it hit higher, you take a profit. For example, here your first trade, I think your first plan, once it reached the higher, you take a profit, isn't it?
No, I did not say take profits, break even. Break even means that.
Okay, you break even. Yeah, of course, it is correct. For example, here, once it take a higher first times, but it come back to
Exactly. It can hit your stop loss.
and it can hit us,
So when
but
there's I
yeah,
break even when there's a new structure, when there's a new higher high or higher low structure on the lower time frame.
yeah. Okay.
That way I am safe based on what happened next because I don't know what will happen next. You see, my TP could be very high and price has not gotten to my TP yet, but the structure has created a new higher high. So a lower high is expected if it's still in my direction, right? But in the process of a lower high and I'm wrong, price then creates what? A lower low. And then that stops me out, right?
Okay.
So that way I am safe. So sometimes I break even and I take some percentage off from the break even point.
Okay.
You see?
So
And then I leave the remaining one to run to my take profit.
Yeah. So
That was
what
why
do you call this thing?
I said when we study structure on Friday, you will learn more about structure. And then I will bring up this topic and explain more with the structure because right now you're just that's why you see this is the first part of the mentorship. But how much value have you gotten and how much have you put together? We tell you where it's heading. This is just the part 1. So by the time we get to part 5, you will now have to come back to part 1 and start to see why we did this, why we choose this, how this makes sense, how this doesn't make sense. how you thought what you answered the first time was correct, and why you think now the current answer is correct. Do you understand? So the
Understand.
comparison will come in later in the day, and then you're not supposed
Mm.
to understand everything right now. So don't worry about it. Time will tell how much you understand from the information. Okay?
Okay, understand.
So number 13, you say break of structure is my first TP, and that one is perfect because that is what we're talking about right now, about the higher high and higher low, right?
Mm.
So you can't really tell what
Right.
happens after a break of structure. But at the same time, when I teach you about structure, you understand that every time frame has its own structure. So you can't really tell which break of structure should be your main TP. But when you say the first break of structure happens on the lower time frame, like 5 minutes, 1 minute. And that might not be your general take profit. You see? So and your
Yeah.
setup can be on the 1 hour time frame. And then the first break of structure happens on the 5 minute time frame. Do you now close? No. So yes, your first break of structure is where you break even, not your take profit. You break even, you take some profit off, but you are still in the trade till it gets to the main direction. You understand?
Okay. Understand.
Now number 12, we talk about how many percent you make, how many percent is your main target, how many percent do you want to take. So when you say 10% to 15% to trade, remember when you said you risk just 10% a trade? When you risk 10% and you plan to take 10%, isn't that 50-50?
Of course. Yeah,
So
yeah.
you're understanding my point now.
Understand your point.
That was why I said you risk 1 or 0.5. That way, when you get to 10%, it makes sense to take profit. And then you are happy because you only
Okay.
risk what? 1%. That is trading. But when you do it like this, it's gambling because it's 50-50. And it's the
Gambling and
normal thing
a
because you're
game.
very straightforward. That is the truth. This is what most people do. But when they don't
Yeah.
calculate it, they don't really know. It is why we calculate these things. It's why we start with this particular aspect, because you have to know so you can be able to make those changes in the future, and you know why you made those changes. So when you start trading, you know how important it is for you to not risk above 2%, because you know that you're going to take profit around 10 to 15%.
Okay.
You understand me now? So yes, I would say make 5 to 10% for you to be okay, because if you make 5% today, you make 5% tomorrow, that's 10%. And if you
Yeah,
make
we've been
10% today, that's a good day. It means, doesn't mean you cannot make 50%. Doesn't mean you cannot make 20%. So I like to make comparison like 5 to 10% is reasonable. So you don't get greedy. When you see 10%, 5% on a struggling day, that day is too difficult. You take your 5% and you live peacefully. And 1% a day is not still a bad thing. As long as you don't close the day on losses, you can always make more the next day. So what matters mainly is that you make profits. But for your take profit, 5 to 10% is reasonable for you to come back the next day again. Do you understand?
understand.
So I just sent the corrections we just made and what we just reviewed. So you now use from now to Friday, use this information we just made to try and see how you can place trade on demo already with what you know. See the difference, observe the difference, and then we'll
Yeah.
discuss about it on Friday while we look
Yeah.
into market structure as the new topic for the day. Okay?
Okay.
But this is the first stage, and we just completed the first stage by setting you up with a new psychological concept for your
Okay.
trading. So this is making sure that what you have on your head, from my point of view, I know I have corrected it. And as long as you stick to what I have showed you here today, you definitely would have a proper mindset when you are trading. That this is the aim of why we are doing this. Then now I will teach you my strategy. Because if I teach you my strategy and you use a very bad trading plan and a very bad risk management, you won't make money. It's not the strategy that makes you successful. It is the means of which you use the strategy.
Okay.
Do you understand?
Understand your point, but for regarding this one that we are discussing here, I think it's very important, more important.
I'm
I
very
think you have
happy
to,
you see this because at the
yeah,
beginning you thought this was a waste of time.
yeah, like a waste of time, but it's very important because without this one, even if you know each and everything is not following a proper plan like this way, you're
You
gonna,
see?
you're gonna suffer. You're gonna suffer.
That was why I asked you at the beginning, have you ever tried something like this and you were not successful? Because it's very
Yeah,
important.
yeah. I think this one is very important more than a strategy.
You see, and that is why it's the phase one. That is why it's the
Yeah,
phase one, because I have friends who use support and resistance, but use things like this. They don't want to know anything about smart money concept. They don't want to know
yeah,
because it will make what
yeah,
they already know with their plan difficult.
yeah,
You see? And
yeah,
then when I try to explain to some people, they make it look stupid because they don't really know, they have never tried it before.
yeah,
Just like how you saw it in the beginning as a waste of time. You see, I did not argue, I just wanted you to do it because I've met so many people who don't think this part is very important because they have never tried it, but they keep losing.
mm.
You see, they
If you
keep
meet,
losing.
once you meet with the people that is rejecting this matter, I think he's not trying even, he not understand even blowing one account. Because once you are teaching things like this one, I do reflect how I was blowing my account, each and everything so far I've been conducted it on my mind. So that's why I told you that is very important. Even once you say that the friend that's using support and still successful because of this one, not his strategy. That's why every strategy, even if the one is using only moving average, can get to be successful through using through
Exactly.
this one.